In this session, we are going to see about the Bonus Act 1965. It is an act to regulate the payment of bonus to certain establishments from the profits. Section 1 deals with the applicability of this act. It says it is applicable to every factory, number 1. Number 2, every other establishment in which 20 or more persons are employed on any day during an accounting year. If during the accounting year, on any day, even on a single day, 20 or more persons are working, in that case, the establishment will be under this act. Every other establishment in which 20 or more persons are employed on any day during the accounting year. Number 2. Number 3, the appropriate government may, after giving 2 months notice, by notification, apply the provisions of the act to any establishment or class of establishment employing numbers less than 20 but not less than 10. This is the third. The appropriate government may, by notification, after giving 2 months notice, specify that certain establishments, even if they are employing less than 20 but not less than 10, will also come under the provisions of the act. This is the third condition. Regarding the applicability, the fourth is, if the establishment has come under the provisions of the act since it employed 20 or more people, and subsequently their employee strength has fallen down to 17 or 18, then also the establishment will be under the provisions of the act. The provisions of the act will be applicable to that unit also. That is, once you come under the provisions of the Bonus Act, the establishment will continue to be governed by the provisions of the act. This is section 1. Section 2 deals with the definitions. We will see some important definitions. Subsection 4 deals with the allocable surplus. What is allocable surplus? Allocable surplus is a calculation of profit from which the bonus is paid. There are some instructions regarding calculation of this allocable surplus. This allocable surplus, it defines where a company other than a banking company has not declared dividend within India under the provisions of the income tax, then 67% of the available surplus is allocable surplus. Number 1, it's not a banking company. It has not declared dividend within India as per the Income Tax Act. In such case, 67% of the available surplus. In all other cases, it is 60% of the available surplus. Then what is available surplus? That is, subsection 6 says available surplus means available surplus computed under section 5. The calculation, the section 4, 5, 6 and 7 deals with the calculation of these profits. Available means surplus calculated as per section 5. Now we will see who is an employee. Employee is a person, the act says, employee means any person other than apprentice employed on a salary or wage not exceeding 21,000. So, employee does not include apprentice, number 1. Persons getting salary more than 21,000 are not treated as employee under the provisions of the act. Third, the person may be a skilled worker or unskilled, managerial or technical, clerical, administrative or managerial. All persons are included under the definition employee. Only condition is 21,000. You should not exceed 21,000. The act says who is an employer. Employer is the person. In case of factories, it is a manager, owner or occupier or any person designated as manager. In all other establishment, it is the person who has a control over the affairs of the unit, affairs of the establishment. Now the act says it is 21,000. To employee is a person who is not getting salary more than 21,000. Now we have to see what is salary. Salary and wages is defined in subsection 21. It says salary and wage means remuneration other than remuneration in respect of overtime, which is expressed in terms of money. This may be expressed or implied, paid or payable for the employment of the work done. According to this, salary and wages does not include overtime, number 1. This may be paid or payable, should be capable of expressing in terms of money. First condition, salary does not include, salary or wages does not include overtime. Second, it says it includes dearness allowance. Normally the salary will be, 2 portions will be there. One is basic pay, another is dearness allowance. Basic pay will be always fixed. It will increase, will be there by way of increment, and the dearness allowance is based on the cost of living. Only these two will be included for the purpose of calculating the bonus. That is why the salary wages calculating 21,000, only these 2 things will be added. Overtime not added. Apart from that, there are some more things which are not to be included, like house allowances or PF, travelling concessions, retrenchment compensation, or any commission for sales and other things. All such things are not to be included. Now we will move on to section 3. Section 3 says establishment to include department undertakings and branches. If a unit has, if an establishment has 2 or 3 units, it should be treated as one establishment. For example, supermarket has 2 or 3 branches. One may be running at profit, others may be on loss. This person will be interested in making bonus only to that one unit, other 2 units. Since it is on loss, I will not pay, he may say. That is why the Act says all should be treated as one establishment, different units and departments. Only one thing, if they are preparing the profit and loss account balance sheet separately, then that can be treated as a separate unit, provided in the previous year also they have prepared balance sheet. Now we will move on to calculation of profit. This is an important thing, something complicated also. Section 4, 5, 6 and 7. Section 4 says computation of gross profit. The company might have prepared their balance sheet, profit and loss account according to the account standard, according to the income tax requirement or for their own company rules. But that is not taken for the purpose of Bonus Act. We have to redraft them. Section 4 says gross profit is the profit derived by the employer as per Schedule 1 in the case of banking company, as per Schedule 2 in the case of other company. Schedule 1 and 2 give some calculation guidelines. For example, that Schedule 1 and 2, on top of the first schedule you have to write the profit. Then it suggests something to be added, something to be deducted. For example, if it is a capital income, you can reduce it. You are paid as a dividend, you cannot account it here, add it. So, make all adjustments as suggested by the Schedule 1 in the case of banking company, Schedule 2 in the case of other company, then you arrive at your profit. Starting from net profit, make all adjustments suggested by the schedule, arrive at that is the gross profit. This is section 4. Now we will move on to section 5. Section 5 says about deals with the available surplus. Available surplus in respect of any accounting year shall be gross profits for that year after deducting therefrom the sums referred to in section 6. So according to section 4 we have arrived at the gross profit based on the schedules. Section 5 says from that you deduct the things mentioned in section 6 and also add one calculation. In the previous year the unit might have paid bonus and accounted as a expenditure. Based on that the tax might have been paid. Now you calculate the income tax payable for the preceding year based on the two things. One as bonus as an expenditure, one bonus as not an expenditure. Including bonus and excluding bonus, you calculate the direct taxes for the preceding year. That adjustment should be added with the gross profit. So according to section 5, gross profit plus the income tax savings in the previous year because the bonus was shown as a expenditure. Calculation of income tax as if bonus is paid, as if bonus is not paid. That difference should be added to the gross profit. With that, three things are mentioned in section 6 that is to be deducted. So gross profit, add income tax savings on account of bonus payment, then add the things mentioned in section 6. Now we will move on to section 6. Section 6, three things are mentioned. That is depreciation you can deduct. As per subsection 1, section 32 of the income tax, you can reduce the depreciation. Also make adjustments for the development rebate or investment rebate. Anything is given, that also adjusted. Third is you can reduce the direct taxes. The three things are permitted to be deducted from the gross profit. One is depreciation, another is investment rebate or development rebate, third is direct taxes. Direct taxes you should not take into account the actual paid or payable. You have to recalculate the direct taxes as per section 7. Now we will move on to section 7 to see how to calculate the direct taxes for the purpose of profit calculation for bonus. Number 1, any loss, previous accounting year loss you should not take into account. Arrears of depreciation you should not take into account. Any benefit exemption under section 84 of the income tax you should not take into account. Then you arrive at the tax payment. Actual tax may be less because some concessions are given. But calculate the tax without taking into account the previous year's depreciation. You calculate only current year depreciation. Without taking into the previous losses, don't adjust the previous year's losses. Don't take the concessions given under section 84. Three things you take it out. Then you calculate the tax. That alone can be reduced from the gross profit. This is normal rule calculation. If it is a charitable institution, sometimes a charitable institution may also be under compulsion to pay bonus. They may not be paying income tax, but for this purpose you calculate the income tax as if it is an ordinary company. Then you deduct it from gross profit. Same way, individual or a Hindu undivided family. Hindu undivided family calculation may be different, but you calculate as if it is an individual company. There may be an export company. He may be getting some rebate on income tax payment, but there also he calculates the income tax as if no benefit is there. So, number 1, don't take previous year's depreciation, don't take accumulated profits, don't take benefits permitted as per section 84. In case of charitable institutions, calculate as if it is a normal company. In case of HEF, calculate as if it is an individual company. In case of export company, don't take into account the concession given by the income tax authorities. As if it is an ordinary company, you can take. This way you have to calculate the income tax. Then you can reduce it from gross profit. So the procedure is, from net profit we have calculated gross profit. From gross profit we have added the savings on account of bonus income tax, savings in income tax on account of accounting the bonus as a expenditure. From that we can reduce the depreciation, investment rebate and concession under section 84. Charitable institution to be taken as a normal company, and HUF and export company to be treated as a normal company. Calculate income tax, reduce it from the gross profit we have calculated. Now we will move on to section 8, eligibility of the bonus. To be eligible for a bonus, the person should have worked not less than 30 working days in that year. If a person has worked more than 30 days, he will be eligible for bonus. If it is 7,000 rupees bonus for 12 months, a person working in 12 months, this person will be getting 1 by 12. Next, disqualification for bonus. A person is not eligible for bonus if he is dismissed from service for fraud, violent behavior, theft, misappropriation. If it is for these activities, if he is dismissed, he is not eligible for bonus. Section 10 says the minimum bonus. Minimum bonus, irrespective of the fact the unit earns income or not, the minimum bonus payable is 8.3. The Act says 8.33 or 100 rupees, whichever is higher. Section 11 deals with the maximum bonus. Maximum is 20% is the bonus. Even if the company has more profit to pay more than 20, the company should not pay. The maximum is only 20%. In 1 year, because of some, for example, election period, the company earned more profits. Next year, maybe less. This year, they want to pay more. Don't pay more. It is only 20%. There is another concept of set off and set on that we will see in section 15. Maximum bonus is 20%. Minimum bonus is 8.33%. Eligibility is minimum 30 days working period. Minimum of 30 working days. Now we will move on to section 12. Calculation of bonus with respect to certain employees. If an employee is getting salary more than 7,000 rupees, he will be treated as if he is earning salary 7,000. That is, a person is getting 21,000 salary. For all the bonus calculation, he has to be taken at the wage structure of 7,000 rupees. A person getting 7,000 rupees will get 7,000 as pension bonus. A person getting 21,000 will also get the bonus of 7,000. Any person getting salary more than 7,000 will be taken at 7,000 only. His salary will be taken at 7,000 only. This is calculation of bonus in respect of certain employees. 13. Proportionate reduction in certain cases. The bonus can be reduced proportionately. For example, if a person has worked only for 6 months, so he will be eligible only for the 50% of the salary. Then calculation of number of working days. Section 14. Now we have already seen that he should have worked for 30 days. Now calculation is a concept you have to see how to calculate that. For calculating the number of days, if the person has been laid off, that is sending out of office for some temporary period since the factory has no work or accumulation of stock or power cut. In such a case, if it is as per the agreement, that period can also be taken into account. If the person is on leave with the salary, that can be taken. If it is due to an accident during the course of the employment and he is absent because of that, for example, an accident in the factory, he was sick and because of the injury he was absent for 3 months, that should also be taken into account for the purpose of calculation of bonus period. Fourth is maternity leave can also be taken into account. So with all these things, you calculate the days. If it is more than 30, the person is eligible for bonus. We will see from section 15 in the next session.